Hey folks, I'm super excited today. Why am I excited? Because I'm opening up a YouTube channel. What is my YouTube channel going to be about? It's going to be about finance. It's going to be about investing in stocks and real estate and debt and all things money related. Not just things money related. I don't want to talk about spending money on dumb things. I want to talk about making tremendous amounts of money and growing your net worth, making the right decisions. I'm going to be high energy about it. I don't want to sit down. I want to stand up. I'm a high energy guy, and I like to compete. I like to compete with money. I like to compete with everything, sports, etc. So I'm going to be delivering you financial education with high octane, okay? So first things first, if you want to join me on my journey, my personal finance journey, I'm going to give you tips and tricks along the way, and I hope I can learn from you too. So if you have any questions during my videos, don't hesitate to message me. Don't hesitate to leave a comment. And I would love it if you subscribe and join me on my journey. So today, what is the topic? The topic is your balance sheet, my balance sheet. I'm going to go through my balance sheet. I'm going to open up my balance sheet to everybody, okay? I'm not talking about the athletic balance. I'm talking about the financial balance, okay? So I'm going to go through each one of my accounts in kind of a little bit of detail. And in future videos, I'm going to go through them in a lot of detail. I'm going to give you the pros, the cons, advantages, disadvantages, tax advantages, long-term capital gains, short-term capital gains, rate of return, ROI, top line, bottom line. What does that all mean? I'm going to go through all of it. But to begin my first few videos, I'm going to go through my balance sheet here, and then I'm going to go through each of these accounts in a separate video in greater detail, and we're just going to expand on that. So without further ado, let's jump into my personal balance sheet. And before I begin, I don't want to be one of those guys that's doing this to brag. What I want to do is I want to be transparent with my audience. I want to show them my net worth. If you do your personal balance sheet, at the end of the day, you come up with your net worth. And I'm going to be ahead of some people financially, and I may be behind some people financially. But that's not what's important. What's important is that you look at your financial balance sheet and you look at ways to improve it, regardless of where you are on the financial totem pole. So let's start. The first account I'm going to talk to you today, you've probably heard it. Some of you know what it means, some of you don't. It's called a 401k. In my 401k, have $3,500. It used to be significantly larger, but I actually use a strategy to take my 401k and convert it into my IRA, my Roth IRA, through what's known as, a lot of people call it getting a mega Roth IRA. So let me tell you the high level about a 401k, and in a future video, I'm going to go even more detail. So a 401k is a tax advantage retirement account that allows you to put money in. When you put money in there, you don't get taxed on it. It grows and grows and grows and grows for years, and when it's time for you to retire, you get to take that money out, and at that point in time, you pay taxes, but you grow it tax-free, free from capital gains taxes. It's a tremendous tool. An even greater tool is a 401k. The only thing that you do on the 401k to make it more tremendous, especially for you younger listeners, is you throw a Roth 401k or an after-tax 401k. So all that means is, instead of getting the tax advantages today when you put the money in, what you do is you don't get the tax advantage when you put the money in, but you take the tax advantages as you take the money out in retirement. You don't pay any taxes on them. And I'm going to tell you, youngsters, in another video, why that could be a massive wealth building tool for you. And on top of that, a lot of employers who sponsor their 401k plans provide a company match, and that can give you really tremendous returns. So next on my bucket is my Roth IRA. Not an IRA, a Roth IRA. Same deal with a 401k. Roth IRA, you take the benefits are better once your money is already grown and it's time for retirement. You don't take the benefits up front. And a traditional IRA, what you do is you get the benefits up front, but you get less benefits down the road because of money when you take it out as tax. That's a very high level. There's a lot of tips and tricks with it. I used to have, and by the way, with an IRA, whether it's Roth or traditional, unless it and this I'm excluding self-employed IRAs, which have a different set of rules. But for most people, the IRA has a $6,000 limit on it. I'm 26 and I've been contributing to my IRA for maybe 3 or 4 years now. And so technically, when I started 5,500, but let's just round up to 6,000, which it is today, I should have only been able to put like 24 grand approximately into my Roth IRA. However, my Roth IRA was close to 40 grand, and I used a strategy called getting a mega Roth IRA. I'm going to go into that strategy further, and you might say, well then why does your Roth IRA only have $11,500 in it? Well, it's because I use it to buy an investment property, which I'll get into a little bit later. Roth, your IRA is beautiful, especially a Roth one. It offers you a ton of freedoms and what you can do with your money, and you can even take a chunk of that money out penalty-free. So it gives you a lot of freedoms and a lot of tax shields. I'm going to get into that in a later video. The next bucket of money that I have, it's called a brokerage. It's a taxable brokerage, regular old brokerage account. What is a brokerage? A brokerage just lets you buy, sell stocks, right? You think of your Fidelity, Robinhood, blah, blah, blah. You could purchase stocks, you could sell stocks, you could buy options, you could do X, Y, and Z with it. In my brokerage, I got $9,600. This is subject to your capital gains taxes. Now, there are capital gains taxes with advantages. Like, for example, long-term capital gains you pay less tax on than short-term capital gains, which you pay a higher tax rate on. If you buy and sell stocks, the same ones too frequently, in a certain period, you get wash sales. And we're going to get into all this stuff. What's a wash sale? What's a long-term capital gains rate? What's a short-term capital gains rate? What is Biden proposing for capital gains rate? So that way you're educated about all this kind of stuff and you know exactly what to do. And what companies should you be putting in your brokerage account and your IRAs, Roth IRAs, and what kind of usually funds should you put in your 401k? You usually can't buy individual stocks. You got to buy funds. So we've hit the 401k, my Roth IRA, my traditional taxable brokerage account. And by the way, I got to give a shout out to the custodian of my brokerage and my Roth IRA, and the company that I use is Fidelity. And they do a tremendous job, great customer service out of Massachusetts. I don't know these guys, but let me tell you, I've had a beautiful experience with them. And I haven't with companies like Robinhood, which they don't even, as far as I'm concerned, the last time I checked, they don't even offer Roth IRA, which is a disservice. It is literally the worst thing that a company geared towards millennials and Gen Z can do is not offer an IRA. How are you going to do that? How could you be a great financial services company that's supposed to be great for millennials and Gen Z people, but you don't even offer IRAs? Fidelity is the best choice for young people. Next thing I'm going to talk about is cryptocurrency. Some people hate cryptocurrency. A lot of times I hear older people being skeptical about cryptocurrency, which is healthy. You need to be skeptical of your investments and do the research. Some people love cryptocurrency. I know somebody who's the majority of his net worth, the majority of his balance sheet, the assets on his balance sheet are cryptocurrency. I'm not that gutsy. I've got $7,900 in cryptocurrency. I bought it I'm not one of those people that put $100 in, now it's $7,900. I put a couple $1,000s in, and it's up. My cryptocurrency portfolio is up less than 100%. I'm not going to lie, I don't know the exact amount. I do know that my cryptocurrency account currently is worth more than what's called my cost basis, or what I invested. The original principal I put in, that's called my cost basis. So I've actually made money in cryptocurrency. It's not a ton, it's not a crazy amount, but it is something. And Coinbase people, if you're listening, why can't I see my cost basis like I can see so beautifully in Fidelity? Are you trying to hide something? You know, what's going on there? That's not very transparent with your customers, Coinbase. I love Fidelity, but Coinbase, you have got to get it going on. You've got to be transparent with your customers. How can I see my rate of return if I can't easily access my cost basis? I got to open up an Excel sheet and go through all my transactions, the spot price at various points in time that I bought the cryptocurrency at. It is literally like I have got to be I mean, I'm not even going to go further, but Coinbase has got to do something about this. And the fees, too. I mean, I got to switch. So I don't recommend Coinbase, but I recommend Fidelity. So one of the more interesting pieces of my portfolio, and actually my favorite part of my portfolio, and the biggest wealth builder that I've had by far, is my investment property that I live in. That's a spin. People are already saying right now, a lot of you guys are saying, well, if you live in it, how can it be investment? Well, because it's something called, I did something, what's a lot of the slang for it in the investment world right now, if you listen to like Bigger Pockets, it's called house hacking. Not computer hacking. It's not computer hacking. It's house hacking. House hacking is an excellent method to build wealth, and it allows you to avoid some of the massive costs, startup costs that are associated with buying investment real estate. So let me give you the high level. Again, I'm going to do videos of all these accounts and all these terms I'm talking about in future videos. So house hacking. I bought a house with 5 bedrooms, and I lease out 3 of them. I don't lease out 4 because the 4th bedroom is my 50-50 partner. So we had to get creative. Buying a house requires a down payment, which can be as low as 3%. And in most cases, if you're in residential property, as high as 20%. In a commercial property, even 30 or 35%. So the LTV, the bigger you get, the LTV becomes lower. That's what LTV is, the loan to value ratio. We'll get in that in another video. And so what I was able to do was I was able to purchase an $850,000 house. I was a 50% owner of the house, so technically $425 a pop, and we actually beat down the seller on price. This was a deal that was already we were already below market value considerably, not a ton, but considerably enough to make a real difference and say, hey, we have got to buy this house. And the way we knew it was below market value was because we were able to run our numbers and get an attractive high cap rate. We bought it for a high cap rate, but the market commanded a low cap rate. So I'm going to tell you how you can get those kinds of deals, how you can find them. I'm probably going to even share with you the spreadsheet that I use to analyze all my real estate deals, what I use to analyze my cash flow, the tax benefits associated with it, and also the principal pay down, the equity that you build just through the act of paying your mortgage. And the reason this is an investment is because I don't pay the majority of, me and my partner, we don't pay the majority of the costs associated with the house. Our tenants pay the majority. And when we move out of the house, and house hacking, another reason why it's house hacking is because we're able to use a primary residence loan to purchase the property. That comes with, a primary residence loan comes with a lot of perks in comparison to an investment loan. So we're able to leverage a primary residence loan because we do live in the house. You have to live in the house for at least 1 year. You got to sign a paper that says you got to live there for 1 year, and then you can turn into a full-time investment with your lender's permission. So we were able to get into some great financing terms that required a relatively small down payment, 10%. And if I had to do it again, I would have picked a property that only required a 3% down payment. There's a lot of properties that only require a 3% down payment. It's because we went over a certain limit. So we didn't know that at the time, but you learn as you do. So we purchased that. Tenants pay the majority of the rent, and they help us pay down our principal. The house is appreciating. The house, as of today, the house on Zillow is worth about $945,000. We paid effectively $840,000. Sticker price $850,000, but we got $10,000 in closing costs from the seller. So we got approximately $180,000 in change in equity in the house. But my 50% of it brings me to about $92,500 in equity. So I was able to build my balance sheet, build my asset column by purchasing below market value, almost cash flowing. It saved me a tremendous amount of what I was paying in rent, but when I move out, it's going to actually cash flow, give me free cash flow that I can do whatever I want with, leveraging a house hack. And I'm going to go in great detail on this in future videos. My housing reserves are $600 split between us two. It's actually, I should have only put 300 here. Split between us two, 300. So my total asset column on my balance sheet is $125,000. But everyone's saying you have to have taken out some debt. You got a mortgage, and that's exactly right. But I like to consider this good debt. About I'm about $380,000. That's big. That's a high energy number. $380,000 in debt, but I only have $125,000 in assets. What am I going to do? Well, the beautiful thing about this debt is I don't pay for the majority of it. My tenants do. By the way, all that debt is associated with my mortgage. It's not student loan debt. It's not credit card debt or car debt or anything like that. It's what we call good debt. It's mortgage debt that I don't pay for. My tenants pay for the majority of it. And when I move out in about a year, they're going to pay for the whatever tenants are in there are going to pay for all that debt. So I'm not responsible for this debt. It's all my balance sheet, but I'm not. If all goes well, I'm not responsible for it. And I'm going to show you how to run a black swan scenarios when you do real estate financial modeling by using what numbers Section 8 would pay. If you couldn't find any tenant that wanted to live in your property, what would Section 8 pay? And I'm going to go into what Section 8 is, but long story short, it's for a government. It's a government program to help people that are good people that otherwise could not afford to live. They're working people. They just can't afford to live in today's high-priced housing environment. So the government comes and kicks in. And there's not that many in Washington, D.C., where I'm located. There's a shortage of Section 8. And Section 8 would cover my mortgage and actually help me cash flow in the event that I couldn't find a traditional market rate tenant. So guys, this is my balance sheet. This is my debt. A lot of people debt. This is your liability column. Debt falls under liability. These are my assets here. $125,000 in assets, and my liabilities are about $380,000. Again, I would consider this a good liability. So if you want to learn more, and by the way, actually I got to pause, and if my mom and dad are listening, I have got to say thank you. Unlike a lot of people, I was very fortunate not to come out of school with any debt. And I have to, and I had to also shout out my school, Miami of Ohio. Tremendous school for entrepreneurship and fun. If you want to have fun, if you want to be business focused, you need to go to check out Miami of Ohio. You should, maybe it's not for you, but you should check it out. It's right there in Ohio. There was a number of scholarships I was able to get there. I still owed money for tuition, and my parents wrote a check, and they said, hey, listen, we're going to set you off with a debt-free life. So for them, I'm thankful, because otherwise I would have more debt in that column. So I don't have any car debt, thanks to my mom. Bought me a hoopty out of college, and I'm still rolling around on now and plan to roll around on till it's broken down. I did not start with any kind of assets. I guess you could consider the car asset. I started pretty much zero. I realized I was in a very fortunate position, and I acknowledge that. A lot of people start below me. And I'm going to bring on my co-investor in the house. He actually had some student loan debt and was still able to get the house and get qualified for the mortgage. And he's got some interesting tips and tricks, if he's willing to share, that we'll go into in further detail. Until next time, until we cover these other things, what I really appreciate you doing is taking just a couple moments to subscribe to my channel. That would be a tremendous help for me as we go on this wealth building journey. It's not about how much wealth I have. It's not about how much wealth you have. It's just about what it is. It's about improving our financial situations. We're going to go through it all. We're going to cover it week by week. And if anytime you have any questions about any stuff I'm saying, I'd be happy to do a video just for you. So subscribe, like, comment, do all that great stuff. It really helps my channel. Until next time, it's Billy Fitz, High Energy Finance, baby.